Markets are dreaming of a white Christmas and rate cuts to match, but policymakers at major central banks may have other ideas. In this next report, we decode if we will get one last surprise before Christmas. Take a look.
The who's who in markets are convinced that interest rates will bring some holiday cheer. December rate cuts from the Reserve Bank of India, Federal Reserve, the Bank of England and another ECB pause are all priced with at least 90% certainty in financial markets. But it all looks like a much closer call than investors seem to think. Take the Fed, for example. The central bank chief, Jerome Powell, told last month that a December cut was far from a foregone conclusion. Many of his colleagues agreed. October's meeting minutes were unusually explicit in their pushback against another cut before year-end. When it was announced there would be no jobs or inflation numbers before the next decision, many had begun to conclude a festive rate cut was looking dead and buried. So did the markets. 10 days ago, a December cut was priced at just 35%. So why the turnaround in thinking? A few influential officials, including the New York Fed's John Williams, have since thrown their weight behind a December cut. And September's jobs report was read as a tad dovish too. And for all the divisions at the Fed, there remain strong arguments to keep cutting rates. But the gist is that the jobs market is in a risky place. Even if tariff-related inflation finally shows through, there are enough factors working in the opposite direction. Is a December cut less assured than markets think? Probably. But more importantly, is the Fed really going to come out and surprise markets? It feels unlikely, especially now that officials are heading into their pre-meeting quiet period. Staying with the topic of surprises, the contents of this week's UK autumn budget brought with it a relief rally. It's weird given that there were basically no tax rises, not in 2026 anyway. That shows markets were clearly braced for worse. If there's no new fiscal tightening in 2026, theory dictates there's less need for monetary policy to ease. Certainly, it raises a question mark over a December rate cut, but markets still think it's likely to happen. Over in Frankfurt, the ECB is in its good place and will likely stay on the sidelines. But officials there still have a slight bias to ease policy further. Away from Frankfurt, markets should still wake to stockings stuffed with rate cuts this Christmas. But don't assume Santa's coming early. Better check Powell isn't poking investors, slaying those easing expectations. Business Bureau, WION The World is One.